Hi, folks. Welcome to Code and Concrete, where we share the latest trends and the stories of trailblazers in the built environment. I'm your host, Matthew Schneider, the CEO of Building Inc. Joining us today is Sunny Oller. Sunny is the CEO and the co-founder of Meta Space Lab, where she incorporates blockchain technology into the real estate rental market. Previously, she was the Assistant Vice President and Investment Fellow at Rowe Price, acquiring significant knowledge in portfolio management, quantitative research, and trading. Additionally, she served as the Chief Operating Officer of the Cybernetic Economic Intelligence Foundation, where her focus is and was on tokenomics and the valuation of digital assets. Sunny, glad to have you on the show. I'm excited for this one, talking about valuation of digital assets and real estate, things that I think are underappreciated right now.
Yeah, thanks for having me, Matthew. Hi everyone. I'm Sunny. Thank you for this exciting opportunity. I think this is super exciting times to be in blockchain and as well as tokenization space.
Yeah, absolutely. So I sort of flip-flopped from past to present, talking about your role with the Cybernetic Economic Intelligence Foundation. So are you still with them, or is that previously?
It's previously.
Okay. Now it's interesting. I know this is off the rails, but Cybernetic Economic Intelligence Foundation. What is that? What's going on there?
So basically it's they're using AI agents to basically helping you to monetize your data. So let's say, for example, you do the shopping online. Like currently Web2 companies, they just get your data, but they never compensate you in any ways. So their idea was to help you monetize it, yeah, using those data to basically even train the models, train the AI agent. So they can help you monetize it, not only your data, but also with it can implement to the supply chain management so that you don't necessarily do anything. I mean, it's just maybe sometimes when you look at it, it's maybe hypothetical, maybe there's errors and trial errors and whatnot, but it's still relevant in terms of, AI agent in this economy.
I think talking about data sovereignty and ownership and monetization in AI agents, because that's where a lot of even like the blockchain industry in particular is headed, where we want to use AI agents to automate a lot of the responsibilities or the trading and movement of tokens and value. So I think it's really pertinent, and maybe we'll dive into that later, just how that's showing up in real estate and whatnot. But I want to track your journey, because looking at all the roles that you've got, I mean, this is highly technical, whether it's quantitative research or AI agents. What was your story?
It's interesting. So thinking about blockchain first. So, I mean, I was a big fan of blockchain since 2017. So I was like reading about white paper. Just that was my hobby for a pretty long time until I started my startup. But I saw, inefficiency in rental market, especially just because, we all kind of know that real estate is a kind of dinosaur industry where like everybody's basically never changing much anything. They're always doing the same thing. It's always been that way. It's kind of industry. But when I saw how we don't actually own our own data, how digital ID or identity it's not necessarily owned by us, but then verified with the third parties where you have to actually pay for it. I just saw that the architecture of whole, flows basically wasn't inefficient. And that's where I guess I was thinking about why individual has to pay this amount of money to basically verify themselves and pulling their data, and it should not be that expensive. So I witnessed those inefficiencies in the market, and I saw, oh, this is an opportunity to actually create a win-win strategy for renters and landlord, and as well as investors using blockchain. And as you well aware, blockchain has one of the biggest characteristics, which is immutability, which is perfect for data. And so why not? So that's how it got all started from there.
How did you get into the rental market? Were you a property owner, house flipper?
So I was renting my place, too, and then I saw one of my friend actually trying to move from Florida to Maryland to because of her job. She was working for the government related, contracting company, so she had to move time to time, and in certain period of time she had to relocate. So I saw like, she had to, place like 5 different places to make sure that she get, her apartment at the same time when she needed. And the application fee was like $70, $100. It was just kind of a little bit, I think outrageous. So I was imagining, like thinking about like 40% of people are renting. And I thought, okay, there's a significant inefficiency there, but also it multiplied by how many people in the household. So that's another factor you have to consider. And then those actually is basically just bottleneck. It basically doesn't do much to anyone. For the landlord, they have to do the due diligence. They maybe make some few bucks here and there, but that's not significant amount in terms of thinking about, finding a qualified applicant and then renting the place faster and whatnot.
So this is interesting. You're using blockchain for immutability or transparency, not to tokenize a capital stack like equity. Is that right?
So I can kind of walk you through how the rent up actually
Sure.
is stacked and how so we have 3 different modules. So first module is KYC and data pool module, where you using your digital ID, like, and then you do the KYC. We have a global partners; they run the KYC, with us. And then once you verify yourself with the digital ID, you have no issue with the KYC AML related, then you can log into our platform. And then you don't have to pull any of the data. We will do behalf of you, meaning let's say we are using open banking, we're using credit score, and then with APIs, we are pulling, if you're not living in New York, we can pull the eviction data, any criminal data, anything that are legally binding for you or landlord to basically run behalf of you, then we can pull that behalf of you and then share it with the landlord, and that's it. So you don't have to send those information via email or anything unsecure. You don't have to do one by one. So what basically it does is you save the property of your choice. It can be 100 or 10, 20. And then once you save it, once you send, apply, then basically they are sharing all information on behalf of you, because we are basically executing 2 smart contracts. So it kind of verify whether you meet the criteria. It can be credit score, it can be income verification, whatever they might be, because it varies from one, lender to another. So, and then it just stores the whether you meet the criteria or not. So let's say your credit score is a 700 and the lender wanted to have a 750. So then the result says it failed. And then so those will be stored in the blockchain, but without your name. So therefore, you can kind of go and verify what actually happened or why you failed. But you don't have to share your name and whatnot. So its privacy is basically protected. Our basically architecture is in with the zero knowledge proofs. So that's we verify it, but we don't share your exact information. So that's the module 1. I know it got kind of long, but and the second module is the listing. I already kind of go over the listing layer where you can view the properties and then you can save it and you can apply. And also we have tokenization, basically capabilities embedded in there of the properties and whatnot. And the third module is portfolio module, which I'm kind of passionate about it. So, we are building it currently. So what it does is basically turning into, space where, like it can be short term, it can be long term, any space where you're living into more of a adding cash flow streams, meaning with the depends. So let's say you have Wi-Fi hotspot that you can technically earn $1, $2, $3, $4 a day. That it passively, because once you just share the hotspot securely, right? So let's say you're using Helium. So there can be additional, like one of the stream that you can either offset the cost or offset the rent. it depends on who owns it, right? Long term can be either landlord owns it or the renter, the tenant owns it, or if it's short term, likely the landlord owns it. So they can, if you have Airbnb, you can, like offset some of the costs can happen. So it can, expand to the, solar panel. It can expand to any sensors and whatnot they share. So basically it can be customizable, but what we are trying to launch is basically default portfolio first. And then the users or tenants can be customized, meaning they can add the more streams or more tokens and whatnot to basically overall looking what's going to be the risk of it, what's going to be return of it and whatnot. So imagine to increase to across different buildings. I mean, imagine, right? That's whole another cash flow you were talking about. So basically that module we are working on it. I am super excited about it. Yeah. So that's basically 3 modules that in the RentUp, our application.
And what's the relationship between RentUp and Metaspace Lab?
So Metaspace Lab is an umbrella company where
Okay.
we believe that we will launch more than one product. So that's the parent company, and then we create a RentUp as an application.
Okay, that makes sense. I think the first 2 modules, if we start there, are really interesting because they're using blockchain in its most basic but important format, which is the ability for 2 parties to exchange value or information in a trustless and sort of transparent but still private, right? So that's the basis of zero knowledge proofs, where we can trust the information, we can confirm it because it's on a public blockchain, but we don't have to reveal too much. And I think that dynamic between personal data or even intellectual property and blockchains is becoming more pertinent. And we use this in building as well, where we know that real estate has lots of data points. We can't really show the whole world all of that. Maybe it violates a firm's privacy laws, or that it would breach certain data compliance requirements. But we still want to come to trust what's that data is being used for, like valuation. And in this case, it's whether that person is an eligible candidate for the property. So I just want to say that I think that's a really good use case and off the beaten block compared to what a lot of real estate blockchain solutions are trying to roll out, which is like tokenizing the capital stack. Just another way to invest in real estate. You're saying, no, let's use the technology the way it was intended and have a trustless exchange of information.
Yeah, so I'm just thinking like why privacy matters and why security matters, right? I mean, I think that's why we love Web3. I think we're trying to I cannot even say.
Democratize.
Democratize, yes. So, or we can try to win our own right. Having our own data in our terms, I think is important. Like we can share when we want to share, when it's appropriate to share, when we can share. So I think those terms should be based on individuals and how in both parties involved. I think RentUp is trying to conquer how we basically change how we transact. I mean, you have to verify yourself to even get into the platform. That's the one thing, right? But once you get in there, you are free to do anything and everything that's allowed for you to do it. And if you want to do it, then we will do it. It kind of make you meet you in the middle with landlord as well as yourself. Or so as if you're also like landlord, it's the same way, right? You don't need to know everything. So therefore you don't have to have a pile of paperwork waiting for you and to verify everything. You don't even know where everything else is, right? So this is kind of meet you in the middle that you don't have to have all this information stack up, and you have to kind of have it. It's no use.
For the landlords, when you present RentUp to them, what's the major selling point? Because to me, it's very clear for the renter, but what convinces the landlord to utilize this?
So one of the point I just mentioned also is basically a lot of the compliance related. So think about this way. If they have any points to being hacked, I think that's very not good. You don't want to go in there. So I think having a zero-knowledge proof, but also having this approach will prevent them to ever have to deal with any hacking issues and whatnot, any vulnerability issues and whatnot. I think those are kind of omitted. So the risk is already lowered in that regard, but also you will be able to rent it. So let's say if you have already tokenized property, this is no brainer because we are already on the Plume testnet as well as like the base testnet, and we are trying to utilize other, like, so basically we are looking at Mantra and different chains to deploy. So because we are doing the multi-chain approach, so thinking about that, then it's like it's very automatic. You don't have to have a person to rent out your place because it doesn't really make sense when you think about it. People or investors tokenize their property because it's most likely investment property. So so in that case, the main goal is to increase the ROI. For you to do that, first one is basically lowering the operational cost, and then have the right tenants, qualified tenants in time, and no vacant times. So basically that. And it does automatically for you, and you can pick and choose who you want to rent it out. And it's more fair. So you not necessarily have to deal with a lot of, regulations, a lot of things that you have to do it. And when you think about, we have a like lease contract and then deposit automatic release, for example, that's in the components that we are adding into. So then necessarily you don't really necessarily do a lot of stuff in there. It's a lot of things are automatic. So therefore it's for you to have a scale. You can scale up pretty quickly. So that's kind of how we look at it. As we are not necessarily looking at landlord as just one property landlord. We think that if you tokenize it, you also leverage in your capitals. Basically, if it depends on how you want to raise, but let's say you already leveraging your capitals, then you have multiple properties, and then you also leverage in your operational power and whatnot to basically to run faster, quicker, more qualified manner, and omit the chances of getting hacked.
The scalability, I think that's
Yes.
huge. And I hear that a lot. You can implement blockchain for one property,
Mm-hmm.
but the real value of a technology like this is when it's applied across many properties or a large portfolio. And especially when it comes to automation, you could save a couple minutes here or there, and that becomes money saved. But if you can do that with many, many units or something that has high turnover, suddenly that becomes a very lucrative solution. And as you pointed out, it actually impacts the return on investment. It's not just a property management fiasco, it's the actual money coming in. And as property owners or investors want to shorten that gap, like how do we never have to worry about any sort of vacancy at all? So I think that does a really good job of trying to mitigate that point of risk or failure for income for that asset.
Yep. Totally.
So I'm curious your thoughts on the general tokenization of ownership of real estate assets. Simply put, bullish or bearish? How do you feel about tokenization of real estate in general?
I think I'll pick the Larry Fink's statements that everything will be tokenized, and I think it makes sense. So I believe tokenization in real world assets is it kind of a must because real world assets on maybe real estate specifically is well known illiquid assets, right? So, like I think Anton Grubb, he was saying, like tokenization doesn't necessarily increase the liquidity. Sure, I agree. It doesn't increase the liquidity, but if there's a demand for it, like it will make it easier and it can increase the liquidity, by tokenizing it. So, there is that. And when you just think about it, traditionally, having a lot of capital to buying, it's just also bottleneck or limitation for a lot of retail users and whatnot investors. Either you have to be, qualified investors or, institutional investor in order to buy, bigger buildings and whatnot. But by tokenizing it, you can pretty much buy portion of it, fractionalize the real estate. I think that's the big part. And we have to kind of pay attention, but also thinking about when you think about, capital use, that how you're going to deploy your capital is another strategy you can think of, not necessarily putting in everything, all the eggs in one basket, having multiple, strategy deployed together, but having diversified strategy, right?
Right.
Buying some tokens in Florida, some tokens in, I don't know, Georgia, where you are, some tokens in DC, some tokens in, I don't know, Spain. I mean, in many different way of doing things. So I think this is the future. And then it depends on how you strategize your strategy. I think it can do really, well for you in terms of earnings and whatnot. So.
Right. And if you couple the diversification with potential liquidity, then what you have is sort of a maneuvering of risk in the market, because you could reallocate when it's necessary. And if you start to notice that there is excess risk in the DC market, right? If every time that there's an administration change, we know a lot of people are moving. And so maybe you don't want rentals in the DC market during that time. And so if you can quickly move out of that and reallocate into a different type of investment, and it doesn't even have to be real estate, it could just be another tokenized financial product, and continuously rebalancing your portfolio. And I mean, just look right now, what we're seeing with the stock market. It's
Oh, no.
sold off tremendously, right? And you've got a
Yep.
lot of people who are they're stuck in it. They're in equities, and maybe they're working with Fidelity, and the plan is not to go short, right?
Mm-hmm.
That's what a trader might do. Say, okay, well, things are going down. New tariff
Mm-hmm.
news, I'm going short. Well, a lot of people aren't flip-flopping. They're just they buy the stock and they hold it. But I think that's quickly becoming an outdated model, where there needs to be versatile, rapid, and data-driven decisions to move investments around in portfolio, and especially in private markets too. Which brings me to your background in quantitative research and trading. Tell me a little bit about that.
So, I mean, that was my previous life in Web 2. And, that I was working at that one of the biggest asset management, globally, that, I learned a lot. But also I think it kind of helped me to understand, even Web3 markets, how we can strategize. So I'm bringing Larry again, but I think his vision is basically what I also see, that I think there's a reason what it needs to be tokenized also, but there is also upside why it should be tokenized. So if you tokenize, basically when you build a portfolio, you can literally build a portfolio with equities and bonds and RWAs. Because what you can do is you can measure the risk and you can measure the return. And there is a beauty in it. So, when you create your own portfolio, and you just mentioned also rebalancing and whatnot and everything, but everything is possible is because there's data. One of the reasons why, tokenization fund and, financial instruments, is tokenized. The first, it's basically data is already there. It's just extension of it. And it enable you to do the 24/7 trading. It enable you to even look at even more, in depth of data. It's so the, immutability of the data is kind of the fundamental thing from the financial market already anyways. So it's basically extension of whatever already existed and then existing right now, and then to do that. So that's why it's so it's so easy to look at everything as an asset. I mean, I'm not saying house is an asset, but it is an asset, right? It is a real estate. So, so basically you can kind of measure and figure it out how you can use it. So think about, I think hitting to the point where why tokenization it matters also is basically, real asset. When you think about it, it's basically having a collateral, on the back end, right? So, it's kind of funny because if digital money like meme coins or thinking about just digital, tokens, maybe it's so foreign to regular investors or they're risk averse for that, right? So that's why we are bridging like RWAs or, T-bills, tokenized T-bills, for example. This is comfortable for them, like comfortable to institutional investors or regular Web2 investors to digest. That's why it gets so much booming and coming now because they can actually know what's behind it, right? Although they don't have to take the too much risk to basically going into this market because this market is going to be hype, like everybody's going in there, but I don't want to take too much risk because I don't know what I'm going, myself getting myself into. And when you think about it, this is perfect example where I can see what the behind it, I have a real estate behind, on the back, it's collateralized, basically you know what's behind it. So that's it. And that's why it's so easy to digest.
How do you think that this is going to impact trading and derivatives? I imagine that more data means more activity and new financial instruments that could be created.
I mean, sure, like when you just think about it, I mean, and also probably adding to AI agent, is no brainer. So the market is like, it's kind of funny because, when you think about it, it's like there is always inefficiency or efficient market, theory where but it's going to be really chaotic in some ways because there will be a lot of noise and maybe, wrong information in whatever form also can cause a lot of chaos in that way. And, like, so also the derivatives and whatnot, different, basically instruments will always popping up because it just depends how you look at it, making the market neutral, different strategies, but also you don't have retail, users can have a more empowered, meaning like if they know how to use different tools, you don't necessarily know everything, right? So for example, you don't have to know how to code Python. You don't have to know how to code C. You don't have to know how to code C++. Nothing. Like you can just work with AI agent to basically have, let's say DeFi agent, just build up with, I don't know, Fetch AI, whatever you want to use it. And then just train the model. And then from there, you can kind of test it. You don't have to put actually all your money in there, but you can have put like, I don't know, 100,000, $100 or $1,000 or whatever that, it works for you and then kind of test the strategy, and then go from there. So, I think it's gonna be, if you are willing to like learn about it, I think this is a perfect market to test it. And then going forward, it's AI agent is not going away and tokenization market or the Web3 market, blockchain and crypto is not going to go away, anytime and here to stay.
Certainly, certainly. AI agents, I wasn't super familiar with them a couple months ago, but
Mm.
it's becoming pretty obvious that these are, I mean, they're people that don't need breaks. They can
Mm-hmm.
work 24/7. And that, I mean, the amount of efficiency that's going to come from that is really exciting. So I want to tie that back to Rentop. Where do you see AI agents assisting some of the rental process or just other modules that Rentop might explore?
Yeah, good question. So I think for us is we are exploring the resource allocation for, let's say, the portfolio modules where you can technically, if you have a solar panel, your rooftop, you can do the energy trading in that regard. So there's a lot of moving parts, right? Not all, like the energy part is one, but also trading part is another. It's management. So we have to know what the usage of it. So all this tracking, we will deploy the agent in that regard because I am not going to take, follow it's going to be too
Right.
much work for individuals to do it. Like, we could do it, but it's just, it's going to be too expensive in terms of because since we are also a startup. So in that case, it's going to be very well used cases for that. But also, assisting the rental, as you mentioned, like, which one is going to be, better suit for you. Because as right now we're like meaning early. So, but once we know that your patterns, your trend, like what you're looking for, if you learn more about as a users, or we know more about you as a lender, then there's a trend for it, right? What kind of, like the personal or, the type of tenant or type of lender you like, what area you like, what's the area, like how much rent you are willing to pay or and things like that nature, then, it's basically easy to, let the, agent search for the place for you. So it's gonna be agent economy regardless. It's a matter of a when. But it's coming. So in that regard, like the utility management and then whatever passive income that you have, you can earn more. Okay, this can, let you earn more. Do you want to try this and whatnot? So some of the suggestions, because a lot of also depend, like the modules or protocols keep popping up. And I mean, unless you keep following, it's like, what's this? What's this so new? Like everything is new and certain thing and whatnot. So it's kind of easy for you to get lost, right? And everybody can lost so easily. So in that regards, the knowledge base, that's where they can help us to navigate this and to benefit users. This rent up is all for the users. We want to utilize the technology to help, and why not? It's a passive income, so it should help you too.
Yeah, you mentioned a couple deep in decentralized physical infrastructure network ideas in here, monetization of hotspots or solar panels. And then you have AI agents that could be trading excess energy to neighboring properties, which is so interesting because that's smart city philosophy being tied back into just blockchain. Like if start moving things onto the blockchain and you sort of open up the world. It's a very interesting rabbit hole. Do you see yourself getting involved in deep in stuff? I mean, you did mention the hotspots and maybe solar. Are there any areas that would be priority?
We're kind of approaching to more hotspot and more energy as of now. But if any other different providers, if they're interested in, I mean, we're here to collaborate because I feel like that pushing one-to-one individual module or gear to any space for the pins, I think that's a lot of work for. So the unit economics are not good because for that. So instead, if you think it's beneficial to having it at home, like let's say the sensors and maybe the air quality, and things like that nature, then you can feel free to reach out. That we're happy to, work with any different providers to kind of see if there's any synergy for it. But like I just mentioned, that we have a, kind of thinking as default portfolio, but everything else can be customizable, meaning you can add it. So, we're kind of thinking, one of the, I think, risk assessment, providers to kind of see the tokens, if they're, risky or not, to kind of assess it before you add into your portfolio. And then if it's good to go, then you can add it and then we can calculate it for you. And then it's up to you to whether you want to deploy it or not. Everything is by choice and there's no obligation.
When you say something like air quality and deep in, for my own curiosity, how would that work? Is it that you're contributing data and then you're being compensated for that, or you're monetizing your data about that device?
Yeah, that's one. But also you also the so for example, one of the other things relate to that is like noise data. Silencio that which is also deployed in peak. So it's not necessarily tied to home, but it can be tied to your phone. So which can be, so there is a one, I guess two way of looking at it. One is the gears or sensors attached at home, or you can use it with your phone. That actually can be you as a portfolio, meaning you can customize the portfolio with the whatever module you have on your phone, and then you can add it. So, I mentioned like Wi-Fi or the solar, that's typically just tied to home. And that's why I mentioned the exact examples. But yeah, I mean, those once you contribute to the data, then the basically the ecosystem will compensate you for that. So that's how it works.
Let's talk about data in general. I'm very passionate about data. And
Yep.
from your reaction, I think you like data a lot. Well, to be a quant, you have to appreciate data and the analysis of it. How have you seen this evolve in the Web3 space? Because now everyone wants to be data rich and people are appreciating the value of that. Where do you think the strengths? Well, we sort of hinted at it that if you have access to data, then you can make decisions, and that's great for trading. And then of course there's the monetization. I'm almost answering my own question, but of course I want you to answer the question. So where do you see a lot of the opportunities for injecting data into the blockchain space? And I kind of keep that wide open because you could be talking about tokenization, DPIN, RWA. Where are the biggest opportunities for data right now?
I don't know. I mean, I think what you're building is also super interesting. I think, I mean, we talk on offsites, but from the ground up, I think having a data of home, I think that's also, it directly impact the RWAs, meaning the tokenization for the house, because you already have the pure data there. So that, your data is already quality good. So having a good quality of data, I think that's a super important. So it's like, a lot of data can be somewhat noisy in a way because you are basically moving to Web 2 data to Web 3. But in the meantime, to bring it to on-chain, like you have to always make sure that those are data clean and good, right? So there's that. But I think to your point, I kind of sidetracked just a little bit. But so I think biggest opportunity is it's always going to be, I think, the investment side of it. So it can be, 24/7 trading. It's also widely open. And think about before tokenization, it's really difficult for any users outside of, for example, US to buy real estate in the US, right? So either you have to have a full amount of capital. If you're ultra wealthy, no problem. But if you're not, then I think there's almost like no way. Or you spend so much money for compliance costs and whatnot. Because tokenization, to be honest, it's kind of omit those costs to minimize. Meaning, at the first, when you tokenize it, you do have to pay the compliance costs for sure. But once you do that, it's just later, it's like maybe more so than maintain. But then whoever user wants to buy it, then they can just go ahead and buy it. Like they can, clarify themselves as KYC and AML, whatnot. If everything is clear, they can just go ahead and buy. So which is easier to transact. So to your point, what's the biggest opportunity? The opportunity to become like everybody's can do anything pretty much in terms of buying and selling. So the scalability is a big thing. So basically certain investors were more, I guess, have more open to opportunity. Now it kind of changed to overall population. So, I think that's basically one of the opportunity. And because of that, that actually creates liquidity because more demand to buy and then more, so there's a demand and supply. There we go. So then, not necessarily, automatically creating the liquidity, but if there is a demand for it, then there is an opportunity by tokenizing it. And therefore, buying and selling and whatnot and around those, and they have opportunity there. So yeah, I mean, it's basically more clear, more clean, but also, more fair. It's fairer transaction. And as well as it's open to the public.
Where do you see some of the challenges?
Regulations. So I think it's, the blockchain and tokenization and whatnot, it's still new. I mean, blockchain is not new, but, tokenization and whatnot and new, like the adoption in the market, it's new. So I think the regulation is always kind of catching up afterwards. So I think that, this is no exception. It's still the same. So, some of the other countries like UAE and maybe, Singapore, some of the areas they're already advanced, except then everyone else is kind of following, right? And trying to make sure things are good and whatnot. So I think that there's that, and also user adoption. I mean, you in the space for a while, and so a lot of stuff. So yeah, a lot of things I don't have to explain. You already got it. So, but then most of the times it's just because we're passionate about it, but not necessarily we have to think about the regular users. We don't necessarily know how the internet works. Like we don't care about TCP/IP, handshake, whatever. We don't, it's like, if you just think about it, just, email, you send the email and some other part of the person should receive it, right? So that's kind of the thing that I think we want from even the blockchain or crypto space. We don't need to know or we don't want to explain what's behind the scene. But as long as the quality of the technology is good, as long as you can trust that like all the technical capabilities and everything else is it's actually executing what it says it will. I think that there is that. So user know just a little bit about it and they know the benefit about it, and that's it, and that they can just use it comfortably. I think that's a builder's job there to make sure everything else is very seamless. And I think the technology itself maybe just it always has to be good, meaning like we don't want Luna happen again.
Right.
Yep. So it can happen, so we need to always test it and sandbox it before we deploy anything. We always check, like different scenarios, testing, always test. Always test. That's kind of my thing, and me and my co-founder, we're like, make sure you always test, right? Like, otherwise, I don't want to see the errors. Like, we don't want to see the errors. Like, we just always kind of make sure. So that's kind of the thing. So yeah, I think that goes the same way.
You mentioned regulation, and you're in DC, so I want to ask, what are some of the regulatory improvements we would want to see, and maybe they're already in effect in another region and we should follow suit? What are those adjustments that would move the industry forward?
I think I'm not an expert in the regulation, but I think UAE is definitely, kind of pioneering, and they have let's say they have a free zone, right? So they can set up any business, but especially a lot of crypto companies move there, because it's easier for them to do the business there instead of, our previous, terms. Basically, it was not easy, and nobody wanted to deal with it just because regulation was not friendly to blockchain and crypto, and everyone thought that crypto was a blockchain was a crypto, which is not true. So I think the clarity and then again the user education is the thing. Like we're not trying to make you an expert in any regard, but like terms and definitions and technology stuff they should have whoever make a decision or regulations have some understanding of that, and then go from there, because those can be a very impactful technology for a lot of users, and we should not ignore that part. Not necessarily only the money making, but let's say trying to protect the user's privacy, and a lot of paperwork that they can be omitted. Also save, that also means save trees, save the cloud space, save electricity and whatnot. So there's a lot of effect, that impact by those like even small changes, regulations and whatnot. I think those are super important for us to kind of care. So I think we can just trying to look at UAE a lot when it comes to crypto, and then kind of go with it, and so that we are kind of aligned with everyone else who's pioneering, and then go from there. I'm not saying they're the best, but so far they are doing well. So I guess there's a reason why the company is moving to that direction. So
To ask the inverse again, is there anything that the US is doing really well?
I think we trying to help each other. I think that's moving pragmatic or moving things fast. Especially I think if you're in a build space, or founders, or like the people who are actually involved with the educators, or any different organizations, then you already know like how we can do this, things basically better. So I think those are openly discussed. I think the US is very practical and pragmatic in a lot of ways, and compared to different regions. I'm not trying to compare, but sometimes, I've heard like European countries, people like complain that, oh, they discuss for everything for forever. So nothing is moving. And I totally understand. Sometimes it takes forever for them to move any needles, anywhere. So they're stuck. So that's what I heard. And compared to that, I think the US is, we are now moving to this and ABC. So then, okay, let's go and do that, right? Let's make the changes. So now, compared to the Biden administration, now things are a lot, different
Right.
then. So I think we're adapting the change pretty quickly. I think that's what US is good about.
I appreciate you entertaining these regulatory questions because I know it was sort of a tangent and it wasn't on the agenda at all, but I do think it's interesting. And it's playing a big role because there's one thing that you mentioned that really needs to be highlighted again, which is that blockchain is not crypto and crypto is not blockchain, right? And understanding that differentiation so that we can go back and use blockchains in all sorts of industries without having to think about securitization or Howey tests. Like that shouldn't be applicable because I need a smart contract in order to use a blockchain to have immutable information. Like I'm just trying to exchange information about this rental property. Why do we have to do a Howey test, right? So just understanding that these tokens might exist, but they don't have to be financialized, and they
Mm-hmm.
and they don't have to add in all this nuance. And especially as you start moving all these industries on chain, that means that there has to be wallets, and wallets move tokens, and all of a sudden you have these rules about who can use those tokens because they might be classified incorrectly, and then it's just totally improperly using the technology. So I think that it's warranted, and we think about it the same way, right? You and I have similarities in the way that we are using blockchain in a multifaceted approach for a golden copy of information, a zero knowledge proof means of moving that information and making decisions off of it, and then the tokenization aspect of that asset. I think that all of those complement each other really well. And just looking at trading, if you think about trading in private markets, all the data that needs that you want the privacy of private markets, but the power of public markets. That's what we're unlocking here. And I think it's really, really phenomenal. So,
Yep.
looking at the roadmap for Metaspace Lab and RentOp and anything else that you might have in store that you're not telling us, what what are you working on? What can we come to expect?
Exciting stuff. But mainly a lot of partnerships. Basically, we're trying to see how we can benefit using technology to benefit not only Web2 users or Web3 users, but everybody else who's involved that actually can benefit because that's kind of main goal. So right now I'm working on talking to different people and how we can actually, do the partnerships and benefit all the parties involved. So that's my main goal now. And then in the meantime, we are working on the module 3, the agent and related portfolios and whatnot to basically, so always open to do the beta testing with any, interest, like anybody who's interested in our project, feel free to reach out. So, then, and also talking to some people in Dubai, like, so basically, because, as I just mentioned, their regulations and everything is so, friendly with the blockchain and crypto. So, it's easier for us to work in any, regards. So that's also up and coming. So a lot of exciting stuff.
Going international. It's exciting. And I think I've got a nice introduction for you. We can talk about that after the show, but I know some folks with rental properties and they would love to use blockchain in all sorts of ways. Naturally, they're a client of ours. but I do think that they would be excited to hear more about the solution that you're bringing to the market and get some new partnerships and deal flow for you. So
Awesome.
I want to talk about like what's going on with the company. Do you have a call to action for folks who are
Mhm.
listening? Are you raising a round soon?
Yes. So we are raising right now. So if you're interested in, let us know. So, we can send documents and proper, information related to that. So yeah, we are raising right now. Anything is welcome. I just mentioned partnerships.
Exciting, exciting. Well, I've enjoyed talking about the real use case, as I think of it, of blockchain, which is the transaction and the protection of information between two parties. And then, of course, the tokenization of the asset itself. One thing we didn't touch on too much was digital asset valuation. Do you want to fill us in real quick what that means to you?
So, basically to me, so I just briefly before mentioned the risk assessment tool. So, they're called Particular. So I don't know if you heard of them, but they're doing a
Very,
phenomenal
very
work.
familiar. Yeah.
Okay, I am a big fan of them, but basically, they just did a partnership with Moody's. So I think it's basically they're expanding the traditional basically evaluation to digital space. So it's not going to be. I mean, it's going to be different because you're looking at what chain you're deploying. So things like so. In terms of the risk assessments, looking at the risk, it's basically the same, but in terms of what you're looking at, it's different. So in order for you as a user to utilize, the valuation itself, you have to know what goes in there. So that's why we haven't, so it's still building, right? So the space is not mature enough. So you have to be aware that's what kind of risk you're taking. So for example, like if your assets in Ethereum versus if your asset is some other chain that's new, and have a less TVL. I mean, TVL is not one of the total value locked, one of the, kind of like measures everyone's looking at, but it's not everything, right? But it's a one of thing and how many users actually using, what's the transaction volumes, like, what's the gas fees, how, and related to the assets. So everything else is, relate, like the components to measure the risk. This is, it's up and coming and it's still new, meaning the valuation itself is not new, right? It's been around, but with the digital assets, it's a different way of looking at it. I think that's the framework and whatnot is still building. But we need to kind of, so what we know already when we're looking at the tokens, and they're making it more, as a framework to make that it can communicate with the traditional, assets and the traditional also investors. Right now, maybe you are looking at equity and you're looking at fixed income, but also you're looking at another tab that has a digital asset. And then you can aggregate all the risk together to kind of see. Like that's how I look at as a, asset valuation, not only for digital asset, because if we only looking at the digital asset itself, it has a less value. What's more valuable is be able to communicate with a TradFi and DeFi because that means you can communicate with the TradFi and DeFi. That means the TradFi capital can move to DeFi, which is most of capital is still in TradFi. So it's slowly moving to TradFi. I mean, the BlackRock's ETF actually, was the number one inflows ETF for ever launched, right? Which is also kind of crazy if you just think about it. But like paradigm is shifting, but still a lot of capital is in TradFi. Being able to let the TradFi users understand what the valuation of DeFi and then let them communicate and then have the overall looking. I think that's super important. So that's how I look at it.
Yeah, I think the key there is that digital assets have a huge potential to be very dynamic. You're combining the valuation of the underlying assets, which is TradFi, with new ways to assess data in a range of data. It could be asset data. It could be about the financial instrument, so where it sits on the capital stack, and if that's good or bad, the quality of the smart contract itself, and then the chain on which the smart contract sits. And you have this tier, or almost like an onion, where you have layers of risk that are constantly being calculated into the value of that asset. So instead of going through the bid ask, right, auction, where we're saying, oh, this is risky, I'll buy it at this, I'm going to be a passive buyer at this price, meet me there if you want. We can agree on the fair market value of this asset because it's backed by thousands of data points. It's not really up for discussion at that point. It is what it is. And you buy or trade that. And I think that's just super, super powerful. It goes back to the what data can do, and it's unlocking capital markets. It really is the fuel for this industrial revolution. But that's enough of my soapbox talk.
Yeah, it is exciting times. I mean, to be honest, right?
I agree. And we're very fortunate to be building in this industry at this time. And because it's still being shaped, it's conversations like this that have influence on where the industry goes, because we are the people making decisions and going out and creating items that people want. So I think that this has been super, super great. Sunny, I'm glad that we got to catch up and talk about tokenization and the variety of blockchain use cases. Where can people reach you?
You can, so we're kind of designing our website, but you can still reach out to metaspacelab.xyz, and then you can connect me on LinkedIn. You can connect Metaspace Lab's LinkedIn page. You can, I'm not big on X, but I know maybe I should, but as you know, there is a some preference. I think LinkedIn is probably my Instagram. So yes, LinkedIn is probably the easiest way to reach me.
Okay. We'll include links for all of those so that people can check it out, connect with you, and strike up a conversation about the blockchain rental space and some of the modules that you're working on.
Sure. Awesome.
Well, thank you very much. And of course, all of our listeners as well, thank you for tuning in. And if you did enjoy the episode or any of the past episodes, we appreciate a 5-star rating. Helps us grow. It's completely free and takes a couple seconds. So until next time, Sunny.
Thank you. Thanks for having me.
Of course.